Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 115 on May 23rd, 2020. I'm your host, Eric. And in this week's show, we will cover the trades from last week on OPKO Health, Penn National Gaming, and Delta Airlines. And then we discuss three new trades on BioCryst Pharmaceuticals, Aurora Cannabis, and Teck Resources. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the U.S. equity markets had a 3% increase this past week. In fact, it was one of the highest up moves that we've seen since sometime in April. The Dow Jones Industrial Average gained 779 points, ending the week at 24,465 points. The S&P 500 index picked up 91 points, closing at 2,955 points on Friday. So now it's time for the topic of the week. And the topic of the week this week is Stoicism and trading. So when I was younger, I used to read all sorts of books on trader psychology. And some of the books were great, but a lot of them were just fluff. And as a side note, I really found that when you're learning, or I find that when you're learning to trade, you're better off reading books that teach you things, like teach you the way to trade versus the mentality of trading. Like, mentality of trading is sort of like a derivative. It's something you learn second. It's always going to be important, but start off with some actual strategies and some techniques that you can implement and start learning, and then start managing the mindset. So one thing these books couldn't do was tell me how I would handle losing money. I mean, I hate losing money, and if I let my emotions get the best of me, then I won't be able to think clearly and make a profit or limit loss. So I remember having a trading loss of $250,000 in one afternoon on a relatively small position when I was on the trading floor of the CBOE. And it really just knocked the wind out of my sail. Now, I went upstairs and at the end of the day and spoke to the partner of the company that I looked at. And he took a look at my position and asked me why I liked it. I told him, and he decided to double the size of my position the next day, which, I mean, was heart-stopping for me at that time. It seemed like a huge thing to do. But he believed in me and what I told him about the trade. Well, by the end of the week, that trade had a $600,000 profit, meaning that was an $850,000 swing of my P&L from a loss of $250,000 to a gain of $600,000 on the position. So I still remember the pain of that loss today. I mean, I remember it like it was yesterday, and that's nearly 16 years later. Trading losses take most people out of this profession, not necessarily running out of capital, but it's because of what it does to them mentally. So being more methodical about all my trades, meaning starting and finishing with the focus on risk metrics, has allowed me to remove more of the emotion from my trading. And that's something I didn't read in many of the books that I read when I was younger. So that's where a little bit of Stoic philosophy has come in handy. So Heraclitus is credited with saying, "To be even-minded is the greatest virtue." Now, understanding risk as a trader has helped me to stay even more even-minded. And there's also a focus on, in Stoicism, a focus on things, situations being neither good nor bad. They just are. They are as they are. We're the ones that add judgment. So losing money in a trade can actually be a positive thing. It can be the thing that leads to you learning a skill that changes your financial future. And I have a number of favorite quotes and favorite books on Stoicism. But ultimately, if you're looking for a great philosophy to help your trading, consider Stoicism. And there's a lot of great quotes there by Epictetus and Heraclitus and Marcus Aurelius and several others. So that's it for the topic of the week. Now let's get into the trade review. So last week we looked at a covered call. We looked at OPKO Health, which is a company I'd never focused on. Symbol O as in Oscar, P as in Papa, K as in Kilo, O as in Oscar. At the time, the stock was trading for $2.62 per share. I looked at buying that stock and selling the June 3 call at 30 cents, hoping for a maximum return of 25.95, basically a 26% return in 5 weeks. Well, this week, shares of OPKO were down 6 cents, closing at $2.56 per share. The at-the-money call we sold can be repurchased for a gain of 5 cents. That means that if you were to close this trade out, you would have a net loss of 1 cent or 1 penny for the week. Now, given that the stock has hardly moved and we haven't even approached our break-even point yet, I would look to stay in this trade unless you overall view OPKO's chances of either reaching that $3 per share or falling below the break-even point of $2.32 per share have changed. So if your analysis of this stock has changed, then definitely close the trade. But if not, the position hardly did anything, I would look to stay in it. Our second trade from last week is a credit spread on Penn National Gaming. Symbol P as in Papa, E as in Echo, N as in November, N as in November. At the time, the stock was trading for $19.35 per share. I looked at selling the June 1918 put spread at 35 cents, which can give you a maximum possible loss of 65 cents per spread. Penn National Gaming stock grew $11.03 per share this week, closing the week at $30.38 per share. That's a huge run up. The out-of-the-money put spread we sold is even more out of the money now, and the spread can be repurchased for 15 cents, which will lock in a gain of 20 cents per spread. Now, given the move in the stock, I would lean towards not changing the position at all. We expect this spread to finish out of the money, which would allow us to keep the full 35 cents of premium that we sold the spread for. So no adjustments are needed on this one. We just hope that it expires out of the money. And with stock trading at $30 per share, that certainly is a good indication that it likely will finish out of the money, allowing you to keep the full 35 cents or $35 that you collected when you sold the spread. And then our final trade from last week is a debit spread on Delta Airlines, symbol D as in Delta, A as in Alpha, L as in Lima. At the time, the stock was trading for $19.19 per share, and I looked at buying the June 21-20 put spread, paying 67 cents, which can hopefully give us a maximum gain of 33 cents or a 49.25% return in 4 weeks. I believe it was 5 weeks last week. Now, shares of Delta Airlines grew $3.50 per share this week. It's pretty big, ending the week at $22.69 per share on Friday. The in-the-money put spread that we bought is now out of the money. We can sell the spread at 22 cents, which locks in a loss of 45 cents per spread. Now, if you're bullish airlines, you might consider closing the trade and looking for an offsetting trade that might allow you to recapture some of the loss on this initial spread. Now, I am more prone to wait a few days before making a decision to close, reverse, or adjust this trade, mainly because I'm not bullish the airlines just yet. Now, the only reason I can afford to do that is that I size my trades in a way that allows me to be able to afford the possible loss. So I'm not going to bet the house on any single trade. Now, there are 4 more weeks left in this trade. I want to be patient and see what the market's going to give me. I might wait another week or two just to see in what direction airline stocks, specifically Delta, are going to go, because I still believe that this trade could end up working out for me. However, I'm not going to be foolish about it either. I just want to trade it, not get emotional to it. So if this stock does continue to edge higher and higher, I would likely sell out of this put spread and turn around and either buy a call spread or sell some additional put spreads to recapture some of my money and hopefully finish with a gain on this stock for the month. So that's it for the trade review from last week. Now we'll dive into this week's trades. And of course, we have 4 more weeks left until June expiration. We are quickly approaching the end of May and arguably entering the final month of the first half of 2020. So just amazes me how quickly time does pass sometimes. And certainly in marking my trading year, that leaves us with 6 more months, really 7 months at this point, to make the profit that you hope is your goal for the year. And by the way, I do start each year with a goal for my trading profit. Hopefully you guys do as well. It just gives you a target to aim for, or at least an idea of where you want to go. So let's start off with the covered call as we always do. And this time we're going to look at a company I've never traded before called BioCryst Pharmaceuticals, symbol B as in Bravo, C as in Charlie, R as in Romeo, X as in X-ray. The stock is trading for $5.45 per share. I'm looking at buying that stock and selling the June 6 call at 58 cents, hoping for a maximum return of 20.73%, almost 21% in 4 weeks on this trade. Now you enter this trade by buying BCRX stock for $5.45 and selling the June 6 call at 58 cents. This trade makes the most money if stock prices finish above $6 per share, and the break-even price is $4.87 for this trade. In real terms, the stock purchase would require $545, and then you would collect $58 for selling the option. Our second trade on the week is going to be a credit spread on Aurora Cannabis, symbol ACB, A as in Alpha, C as in Charlie, B as in Bravo. The stock ended the week at $16.01 per share. I'm looking at selling the June 15-14 put spread at 45 cents, which could give us a maximum possible loss of 55 cents per spread. Now you enter this trade by selling the June 15 put at $2.85 and concurrently buying the June 14 put for $2.40. This is the credit spread because we are selling the spread, and this trade makes the most money if stock prices stay above $15 per share. The break-even price on this trade is $14.55. In real terms, you would receive $45 per spread you sell and have $55 at risk. And just as a side note, there are a couple of reasons why I like this trade. So this had a strong up move recently when the company announced that they would be getting into CBD sales. And in the U.S. particularly, Aurora Cannabis is a Canadian company. And since then, it's come off just a little bit because a couple of banks have downgraded their stock from a hold to an underperform on this news. However, when you look at the stock chart and see the strong move up and also consider why the analysts are downgrading the stock, I actually think this stock has a good chance to stay higher. And if you remember, I said that the stock ended the week at $16. Typically, I would sell the at-the-money spread, which would have been the 16.15 spread. Instead, we're selling a spread that is even lower, a full dollar out of the money, the 15.14 spread. So I like this trade. Hopefully, it makes some money for me. And if you guys are following along, it's a great one to be able to watch because the counter to that is that the option prices are very high, meaning that it looks like the options market is expecting the price to go down. I do take note of higher premiums and looking at the premiums for the call spreads versus the premiums for the put spreads. That's an indication that the stock might be headed lower and that we might actually be catching a falling knife. But that being said, I like the idea of collecting 45 cents and then having a maximum loss of 55 cents. This is almost a 50-50 trade, right? So at a 50-50 trade, I'm willing to take the bet because the risk is in my favor as far as I'm concerned. I'm receiving capital today to take this risk, and at best, I'm going to lose 55 cents or $55 per spread. So I like the way this one works out. Feel free to take a look at the chart and see if it's something that you're interested in as well. Now, our final trade on the week is going to be a debit spread on Teck Resources, symbol TECK. T as in Tango, E as in Echo, C as in Charlie, K as in Kilo. The stock ended the week at $9.16 per share, and I'm looking at buying the June 8.5-9 call spread for 34 cents, which can yield a maximum return of 16 cents or 47% return on capital in 4 weeks. Now you enter this trade by buying the June 8.5 call for $1.07 and concurrently selling the June 9 call at 73 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices finish above $9 per share at expiration. The break-even price is $8.84 per share. So in real terms, you will pay $34 to enter this spread, and your maximum gain is $16 per spread. So that's it for this week's show. Thank you guys so much for listening. Thanks for following along. This is a shorter show for the weekend. For those of you here in the U.S., I hope you have a happy Memorial Day. This is obviously going to be a shorter trading week as well. Only 4 days in this upcoming trading week, so keep that in mind. Be safe, stay healthy, and happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.